Hey everyone, Brian Bogner here. Just want to take a few minutes with you and talk about the stock market. Let's get right into it, okay? As you know, the stock market is down here in 2016. You can see all the major markets here. They're pretty much all down. Bonds are up slightly. So we are getting a rough start to the year. We've seen some headlines about we're in a bear market, things like that. You can actually make a case that for commodities, emerging markets, and the developed world, that we've been in a bear market now for a few years. So things are getting a rough start here in 2016. And so let's talk a little bit about that. All right, 3 points that I want to make with you today that I feel are very important. And let's start with point number one. The price of admission to own stocks is that there will be short periods of losses, okay? I wish I could tell you that when you buy a stock, they just go up all the time. They don't. There are periods of losses. Let's just go back to 2009, the most recent low that we had after the bear market of 08-09. Even in this strong move up from then, we've had some pretty big drops, 9%, 17%, 21%, 10%, 10%, almost 10%. And then we've had these two recent drops of 12%. There will be losses over short periods of time. Now, here's the thing to remember. Do we buy stocks and just hold them for short periods of time? Absolutely not. We look here at the S&P 500. We go all the way back to the late 20s. Okay, these are 5-year returns over a very long period of time. Yes, there have been periods where there have been losses over that time. Now, let's bump that 5 years to 10 years. Well, look what happens. Those losses get less. Let's bump that up to 20 years. Well, lo and behold, over 20 years, even after the Great Depression, there's never been a 20-year period where there has been a loss. So again, we don't own stocks for short periods. We own them for longer periods, and knowing that the price of admission is that there will be losses. Now, why do we own stocks? Well, studies have shown that over long periods of time, they tend to be one of the best asset classes to own. You're owning companies that are creating value, that are employing people, providing goods and services. These type of investments tend to outpace inflation and tend to grow over longer periods of time. And that's why it's an asset class that we have a lot of conviction in owning. Okay. Second point is this. And I want to spend just a few minutes talking about this because I think this is really important. The media does you no favors as an investor. Okay. And this is the thing you have to remember. The media, they are not in the business to report to you, just accurate information so that you can make informed decisions on your portfolio. That's not their business. What their business is to generate more views, more clicks, more people watching what they're doing. And how they do this is they play on emotions. Okay, they structure their reporting to play on their emotions, and guess what emotion is running rampant right now? Fear. So they're playing on fear to generate more viewership. Here's some examples. Here's some headlines right now that I just over the weekend just went on my computer and some that I saw. Market mayhem, 2016, market meltdown, stock carnage, stock market bloodbath. Another example, I even saw a headline that said, oil below $30. $15 could be next. Now, the person writing this has no idea where oil is going to go to next. But you know what? By scaring some people into saying, ooh, $15 a barrel could be next, guess what? Folks are going to likely click on that. So the media does us no favors. It's no coincidence that near market tops, the news stories that come out are, that everything is amazing and awesome and brightest and best and the sky's the limit and these investments are going to go to the moon. And guess what? At market bottoms, it's the complete opposite. There's blood in the streets, all you read, it's market mayhem, all these things. And again, I'm not saying we're at a bottom. I'm just saying the media tends to just play on whatever emotion is running rampant at the time to generate more viewership. So what we're asking folks to do is turn the TV off, stop watching the business news channels, okay? They're only going to, they're not going to help you right now. If you absolutely have to read something, there are some sources that we go to. Some are blogs, some are some online sources. We're big fans of the good old Wall Street Journal as well. Give us a call, shoot us an email, and I'd be happy to share some of those sources with you if you just want to read some really good analysis on the markets. but I would ask you to please turn the TV off during this time. I think it will help you tremendously. Third point is this: investing without a plan is like wandering in the desert, okay? And guess what? If you wander in the desert long enough, you know what's going to happen, right? There's no water, things run out, the heat, everything like that. It's not a good place to be without a well-defined plan. Great quote here: you cannot manage outcomes, you can only manage risk, by Peter Bernstein. So when we talk about plans, there's really two types of plans we're talking about here. We're talking about a risk management plan and then your overall financial plan. Your risk management plan is, and we like to say here at Parallel that we really operate kind of in two zones when it comes to investing. There's offense or defense, right? So think about, you're playing football, right? If you're on the offense, you're trying to score, you're taking risks, you're going down the field, you're trying to, score points. When you're playing defense, you're preventing, you're really trying to hunker down and prevent, that other team from scoring. Right now, we're in a defensive posture, okay? We're hunkered down, we're not taking risks, we're looking at ways to be more conservative, and that's how we're managing portfolios. So when we talk about a plan, a risk management plan, that's what we mean. And then we take that, and then how does that fit into your overall financial plan? Okay, because you don't just own stocks in a vacuum, right? There's certain goals and things that we're trying to meet for you as a client as in your portfolio. So that also has to fit in your overall plan. So I will tell you this: if you are unsure of the risk management plan on your account, if you're unsure of the overall financial plan, please give us a call. Pick up the phone, shoot us an email, and we will spend some time with you and explain that and make sure that you are confident and comfortable in that, okay? So in review, there will be losses over short periods of time when you own stocks. Secondly, the media is not doing you any favors right now. Please turn down the noise, turn off the TV, and it will benefit you greatly. And then the third thing is that we do have a risk management plan, we do have financial plan, and those things are what are driving our decisions in managing your money and helping you reach your goals. So please contact us with questions. Our number's here and email address. And thank you so much for your time today. Have a great week.